The reason I wanted to look at the pound yen, this is the currency strength indicator because it's always the place to start whenever you're doing any forex analysis. And what the indicator does is it guides you to the places to trade, where there's places where there are opportunities, where the currencies are moving. And ideally, what we want to see is we want to see one currency climbing and the other falling. And that's why I was looking particularly at the pound yen, because the pound has been climbing throughout the morning session so far. Certainly from this is a 5 minute chart, so certainly from this period here, we've had a couple of hours of the pound climbing, which is the yellow line. And in combination with that, at the same time, we have seen weakness in the Japanese yen, which is this magenta line. So when we look at which pairs offer opportunities, the one that really stands out is the pound yen, because we've got the pound rising strongly and we've got the yen falling strongly, and therefore that is going to equate into a very strong trend. And you can see it over here on 3, exactly the same process there as well. And what the indicator does, we've also got a similar situation with regard to New Zealand dollar and Aussie dollar, again associated with the yen. So you could really look at any one of those 3 pairs, the pound yen, the New Zealand yen, or the Aussie yen, as great opportunities for trading, because they are going to deliver strong trends. And the reason for that is very simple, because it's displayed on the indicator here. It guides you to which pairs to match, and therefore what the best opportunities may be. Now, in addition to that, what it also tells you is which currency pairs not to bother with for the time being. And one of them, which stands out here, is euro dollar. Now, why is euro dollar not doing anything? I don't even need to look at the chart, because the euro and the dollar are really following one another around, particularly over here on the slower time frame, for the last hour or so at least. They've been following one another around. So there is no momentum, there's no differential momentum between those 2 currencies, which will therefore equate to a trend. So what you're looking at on these faster time frames, certainly as far as euro dollar is concerned, is a congestion phase, no more, no less. So what the indicator does, it gives you all this information in a very clear, very straightforward way. It tells you when a currency is strongly overbought or strongly oversold, so you can look at opportunities for getting into a trend early. It tells you which currency pairs are trending strongly, and it tells you which currency pairs are in congestion. New Zealand, Aussie, for example, wouldn't even bother, because these 2 are just following one another around. There is no trend on Aussie, New Zealand at the moment. The same way in euro dollar. So that's what we're looking at the whole time. The Swiss yen, for example, the Swiss franc at the moment is falling, the yen is falling, so the 2 are falling together, and therefore there's not going to be much of a trend, certainly over the last 5, 10, or 15 minutes as far as those are concerned. The indicator works in all time frames. I've got the 1 minute, the 3 minute, the 5 minute. This is a classical way to set it up, just to have a range over which you're looking. This could be 5, 10, 15, could be any time frames you like. And the wonderful thing with TradingView is you've got this huge array of time frames to look at. Now I'm going to change this over to pound yen, because that's what we've been looking at. A little bit sluggish, the internet this morning. Sorry for that. Let's have a look at Pepperstone. There we go. And the time frames that I've got here, I've got the 15-second, very fast, which a time frame that I like personally. 30-second, 1 minute. We've got the 2 minute, we've got the 5 minute, and we've got the daily over here. And what's interesting, just picking up on what Anna was talking about in terms of the volatility indicator, when you get the volatility indicator on whatever time frame, and it doesn't matter what time frame it is, but when you get it on a time frame, one of 2 things is likely to happen: either congestion or a full-blown reversal. And part of the reason that we're seeing this rally in pound yen, certainly from a technical perspective at any rate, is purely because we have this downtrend in volatility. But look at the volume under that candle. Absolutely nothing at all. When you look at the range of that price action and you compare it with any other candle you care to look at here, a red candle, a down candle, you look at any of these and you look at the associated volume, any of these going right the way across the chart, clearly the volume is out out of balance. It's not in alignment. In other words, it's anomalous. And that is a classic, it is a classic application of Wyckoff. What we're looking at is two things. Is volume and price in agreement, or is volume and price in disagreement? And what this displays is two things. First of all, the indicator itself is displaying the volatility, the arrival of volatility, which, as Anna explained, is to do with average true range. In other words, the price has moved outside the average true range. And secondly, what we're looking at is we're looking at an anomaly in terms of the volume that should be associated with such a move. Because if these candles are in agreement, and there's no reason to suspect they're not, then how come the price has moved this huge distance and yet there's no volume associated with it, or very limited volume associated with it? And what does that imply? It implies one thing. This is a trap move generated by the market makers to trap you into a short position on the daily time frame, and to trap a lot of traders into thinking, okay, this market's now going to reverse. I'm going to go short longer term. And now they're getting squeezed with this rally that's been generated today. And the sole reason for that is because the volume associated with this down candle is completely at odds with the price action that was generated by the market makers themselves. In other words, they have not participated in this at all. It is a trap move. It is something you will see all the time in all time frames, particularly at crossover periods, market crossover, session crossovers, anything like that. You will see it all the time. And what we're looking at now is the trend that we've seen develop. Let's go up to the 1 minute fast time frame. There we are. Really nice trend that's developed. Lots of VPA lessons here, but a little classic one. We're at the live edge now. What have we got here? We've got lots of volume coming in. We've got a nice little shooting star candle here at the top. So we've rallied up there. What are we expecting to see? Well, at the very least, we're expecting a bit of a pause point. Why? Because we've got excess volume coming in on this candle. Nice deep upper wick to the body of the candle there. So we are expecting to see a pause point. Now we're expecting to see a reversal. Let's have a look and see what happens in the next two candles. These two red candles, if we're going to see a reversal, in other words, a reversal from this primary uptrend into a primary downtrend, then what we expect to see is two things occurring. First of all, widening spreads in any red candles that develop, and secondly, increasing volume, because we need to see increasing volume for any reversal to take place. In the same way that we see price action develop to the upside, where we want to see rising price, generally widening spreads, and increasing volume. In the same way, when we're looking at a down move, we want to see the same thing. In other words, we want to see widening spreads, because that in itself indicates momentum. And secondly, we want to see rising volume. And we're not seeing that particularly at the moment. What we are seeing is relatively narrow spreads. The volume has actually fallen on those last two, so it's not indicative of a market that is going to reverse very strongly at the moment. It's more of a what Wyckoff referred to as a secondary trend. In other words, if this is our primary trend, this is merely a secondary trend within the longer term trend higher. In other words, the secondary trend is just a pullback. It's not a reversal into a primary. So we're not looking at a primary reversal from bullish into a primary reversal to bearish. And that is one of the huge lessons, that one of the most powerful applications of VPA, where we look at it in terms of primary and secondary reversals, because the issue we will have is staying in a trend. And that's the number one problem that every trader has to overcome, which is exiting at the right time and taking out of any trend the maximum profit available. And that involves having the ability to identify when these reversals, when these pause points come up, are we looking at a full reversal from a primary uptrend, in this case, to a primary downtrend, or are we simply looking at a congestion phase developing? In other words, the primary trend has not been broken. We're just simply looking at a pause point and potentially a continuation of that trend in due course. It's not easy, but to do that, we also looking at different time frames. So now we're on the 2 minute time frame here. What kind of story is that telling us? Very similar. We had the weakness appearing here, lots of volume coming in here. This is anomalous. It has to be, because if that were not the case, this candle would have closed up here, and it hasn't. It's closed at the just above the open, which implies that we've seen some decent selling coming in on that candle. Not enough necessarily to reverse the trend, as I explained earlier, but certainly enough to give us a warning to expect what we're seeing here. And that's the beauty of VPA. What it does is it removes some of the emotional response that you will see, because when you've sat in this trend, you've got some nice profit in here and you're looking at it and thinking, oh, great, okay. And then as soon as you start to see these reversals coming in, the panic button starts to be hit. You will close out. And invariably what happens is you'll be closing out too early because you've been panicked into it. In other words, you've made an emotional decision and not a decision based on common sense and logic, which is what VPA is all about. VPA helps to remove that emotion. And this is what we teach in all our online one-to-one coaching sessions. And if you are interested in joining those, you can find all the details over on Anna's site over here. I'll just pop that up briefly. There we go. And you can just register there to find all the details on the program. We only take on a limited number of students every year because we dedicate our time to those students. So there may be a wait time, but you're more than welcome to register, and we will keep in touch with you throughout the rest of the year, obviously. So that's on the pound yen. I wanted to pull that one up because it's just had this really nice trend. I also wanted to highlight something else with it. Let's just go over to this one here. I'm just going to change this to the pound yen as well. Just move that over there. Because this is the volume relative strength indicator. It's an indicator we developed last year, and it's a sister indicator to the VPA methodology itself. And what it does is it's a very graphical, many of our indicators are very graphical. They're very intuitive in how you apply them. And this again is an intuitive indicator. And what it displays is several things. First of all, it's displaying the relative nature of volume. So in the same way that when we look at VPA, we're looking at the heights of volume bars, and we're looking at how they relate to one another as well. This does exactly the same thing. We're looking at the heights of bars here. And the taller the bar, then the more there is momentum in whatever that move may be. So the taller the bar, the greater the energy that is being delivered into the trend. Because when we see a trend, we want to see energy. We want to see momentum. And that's what the indicator displays very graphically in two ways. First of all, it displays it through the height. And secondly, it displays it through the color. Because when the momentum is very strong, you get tall bars with very bright colors. And when the momentum is starting to drain away a little bit, it goes to the darker color of that particular option that you've chosen for, whether it's up or down. Now, in addition to that, you're also then looking at the same way we do at VPA. We're looking at, well, we've got a trend that's rising, but we've got the volume, the relative volume is actually falling away here in that trend. So it's no surprise when we get to these pause points here, what we expect to see is two things. First of all, change in color, and ultimately a fall in the height of those volume relative strength bars. And ultimately, of course, this is the fulcrum here, as you would expect, the fulcrum between bullish and bearish. And ultimately what happens is when we get this little minor pullback, which was a secondary against the primary, the VRSI just gives us a hint. It says, okay, yeah, we've got a little bit of bearish sentiment coming in there. But the mere fact that they do not develop very strongly, again, is a helpful tool to give you the confidence to stay in. And then gradually, as we start to see a little pickup in the bullish sentiment again, we start to see it creeping up here. We get over the other side of the fulcrum line, and then we start to see the momentum, the energy in the trend building again. We've come up to the peak now of energy, and now we're starting to see this drop away again because we've got a little bit of a pullback going on here. So it's no surprise to see this gradually dropping away, and we've changed color also. Now, if this is going to change into a full-blown reversal, it's going to have to drop below the fulcrum, and we want to see things like this going on. Change to bright blue, taller bars, etc., etc., etc. but we're not seeing that at the moment. So that's on the 3 minute. And it works in exactly the same way across all the time horizons. Let's go to the 2 minute. Slightly different picture here, as you would expect. A little bit more demonstrable in the pause point there, but then we see the pickup here again. We've come down here. We're falling away. We haven't got to the fulcrum. We're starting to see a bit of brightness showing here as we pick up again. And this is what I meant about this whole business of having the ability to identify whether we are in a secondary trend here, which is a pullback, in other words, or whether we are seeing a reversal from primary to primary. And what it's looking like at the moment is, yes, we've got certainly on the 1 minute time frame, we have this little reversal here. It was highlighted here. But remember, when you're looking at this across the time horizons, when we go down to our 3 level here, our 3 minute time frame, we never got anywhere near the fulcrum, or certainly at any rate at the moment, we've got nowhere near. And it's another reason for using multiple time frames, because when you're using multiple time frames, they give us so much information. We are constantly up and down the time frames. We're on the 3 there. We go down to our 1. And if we're on, let's just keep that on the 1 there. And we would also have our volume under here. So if we change this to the one below to a 1 minute, let's change that to a 1 minute, because then what we're looking at, we are comparing the VRSI above on 1 minute with our VRSI indicator, and we're looking at what is going on in terms of our volume, just purely from a VPA perspective. And it's exactly what we expected to see. We saw the little pullback. It didn't look particularly strong, and now it looks as though the trend is picking up and reverting back to the primary. And that's really telling a story here where we got nowhere near the blue on 2 minute and nowhere near the blue on 3 minute. And it looks as though, as I say, the primary trend is being maintained for the time being. And therefore, we have to sit through that. And we have sat through a little reversal. And now we're happy that we've done so, because it looks as though the trend's going to continue higher. And that's what VPA will do for you. It will remove that emotion. It will take away those emotional responses, if only for a few seconds. And in addition to that, every bar tells a story, and it will tell you what is likely to happen next on the balance of probability, what is likely to happen next. Now, in the same way that we apply volume to a currency, or indeed a stock or an index or a future or anything else, the same principle applies to cryptocurrencies. And I've got this is the sister indicator to the currency strength indicator. This is the CCSI, the cryptocurrency strength indicator, which is a bit of a mouthful. The big difference with when you're in crypto world is that it's very straightforward, because all the cryptocurrencies, as you can see in this example on 5 minute, pretty much move in lockstep together, unlike in the currency world where they will move very differently throughout the session. What typically happens in the crypto world is that they all move together. And this is what you're seeing here. You've got Bitcoin, you've got all of them here, Litecoin, Ethereum, etc., etc. And the only counter currency that we look at is this one, which is Tether, which is the red line. So this is like the dollar, if you will. So we are looking at all these currencies, these cryptocurrencies, against the dollar, which is known as Tether. And the principles are exactly the same. We look for strength. We look for the trend strongly rising here, which is exactly what we've got, and the equivalent for Tether falling strongly. So we know for a fact we've got some very strong trends developing literally across all the cryptocurrency pairs. It really doesn't matter. And the nice thing with this indicator is that one of the many things you can do with it is you are not limited to one currency. You can change any currency you like in terms of the settings. I'm just going to go and find them. There we are. Oh, sorry. There we go. So you can choose whichever currency you wish, whichever cryptocurrency you wish to include here. As long as that cryptocurrency is available on the platform, then you can select it accordingly and add it in. So you're not limited on the currency indicator, the currency strength indicator. You are on the cryptocurrency. You have completely free reign to choose which currencies, which cryptocurrencies to apply. And this is what we've seen in the session, which is this very nice trend developing. And VPA applies in exactly the same way. If you look at it over here, your eye was always drawn in crypto, in the VPA analysis, your eye is always drawn to the high bars and the very low bars, the extremes, in other words. So you look at the volume here, we have a nice down candle, but it's got a big wick to the lower body. So that's telling us we've got some really decent buying going on in there. And what's interesting about the phase of price action that unfolds consequent to that is when you look at this candle here, we've got not quite so much volume as here, but look at the spread. So what is that telling you? It's telling you two things. First of all, it's telling you it's an anomaly. Well, three things actually. First of all, it's anomalous because if that's correct, and there's no reason to assume it's not, we had heavy selling in here, we've got decent buying in there. But if that is our benchmark, then why is it we've got this ton of volume under here in a very, very narrow spread candle? That can only equate to one thing. It means there is some decent buying coming in here. And moreover, we're seeing a lot of buying where previously we had heavy selling. So we're seeing buying in here. So therefore, it's no surprise to see this take off. Now, what's interesting about this trend that does develop, the first candle looks good, absolutely fine. But what we see ultimately in that move is we've got falling volume. Sorry, I've got the icons appearing over it. But you can see there the way the volume has fallen away quite dramatically. And in addition to that, the spreads have not widened particularly. We're just sort of climbing, we're grinding up. And therefore, it's no surprise to see this fall back. But when we see this fall back, what do we see? Very low volume under there. So that again is telling you that the selling pressure under that little reversal there is minimal. There's no heavy volume. It's very lightweight. And therefore, we can expect this to develop further at some point. We don't know when exactly, but this is what's happened. On up we go. Then we get some more weakness here. We had high volume here. What are we expecting? Yeah, a little bit of a reversal maybe. We've got some heavy selling gone in there, more selling in here, a bit more selling in here, but then the selling falls away. So the selling has fallen away. So we've got falling price, falling volume. What's that? It's anomalous. Why is it anomalous? Because if this were going to develop into a full-blown reversal, it should be the other way around. We should see rising volume. We should see widening spreads here, and we're not. We're seeing some weakness for sure, but that weakness has not developed into anything. It's just fallen. So we've got falling price and falling volume. Therefore, the conclusion, the analysis is that at some point we will see this pick up again, which is what we see. Then we've got a nice move here. This is a nice piece of price action, widespread candle, good volume under that, volume and price in agreement. Now we've got a little bit of weakness coming in on the next candle. So maybe if we're looking to hold this longer term, when I say longer term, we're on a 3-minute time frame. So, we're looking at the next sort of 15, 20 minutes in that context. Then perhaps a little bit of weakness here. Next candle comes along. Okay, a little bit of a wick there. Doesn't look terribly encouraging, but nevertheless, it's not enough for us to get out at this stage. It's just telling us that we've got some sellers in here. They've sold out, maybe taking some profit. Same here, really. Nothing too much to worry about. But certainly, we need to break through that level there at 115.067, for a continuation. So we're now watching the next candle. And what we'd be doing is obviously we'd be looking at other time frames. So we go down. That's our 3. Let's go down to our 1. See how our 1 is shaping up and see what that's telling us. Telling us a similar story. We had that red candle there, very low volume, really nothing to worry about, nothing too much to worry about there. Good volume under this candle. These look okay. That's price and volume in agreement. Narrow spread. We've got slightly higher volume there. A little bit of selling on that one, a little bit of selling on this one. For a continuation, now we're starting to look at a level. We've got a level here that may come into play. It's very minor. We want to see that broken out, and then hopefully that'll be broken out with a nice little candle with no great wicks top and bottom, and on up we go. And the whole time you're looking at VPA in the context of levels and everything else. We go down to a 10-minute here, or even down to a 15. Let's go to a 10. You start to look at other things. You start to look at levels. For example, on our 3-minute, we probably wouldn't be aware of this, but on our 10-minute, we should be aware of it because we're now coming up to a very strong area of potential resistance. And that may be enough to cap this trend for the time being. We don't know, but it's certainly something we should be aware of because levels, support and resistance levels, are another key plank of the volume price analysis methodology. And therefore, we need to be aware of it. This is just very straightforward VPA 101 stuff, which is what we teach in the coaching program. And also, you can take a deep dive into all of this on the education self-directed programs over at quantumtradingeducation.com. As Anna said, the stock and the Forex programs there. And can I also say that what we've also decided is that for people who come along to the live stream sessions, we will give you a 20% discount on that. All you need to do is send us an email with this header in the reference. Just put LS 20%, and that will then tell us that you've come along to or watched the live stream live or the recorded version, and we will arrange for you to get a 20% discount off the full list price of either of those education programs. So that's L for Larry, S for sugar, 20%. And just send an email over to helpdesk@quantumtradingeducation.com with that as a reference, and we will then know you've been along to either this live session or certainly watch it on the recording, and you will get your 20% discount coupon sent accordingly. So there we are. I'm going to stop it there because we've been going for a little while now. Really just to highlight the importance of using the indicators like the cryptocurrency strength indicator, like the currency strength indicator. They are there to guide you. They are there to help you. They are there to give you information about where to go and hunt out the opportunities that are available. Let's just see what's going on the pound yen before we wrap up. It's at quite a pause point now, moving into a congestion phase. We've got a little way to go before the US markets get underway, but that's something always to be aware of. And as I say, we look at the currency strength indicator and the cryptocurrency strength indicator in exactly the same way. So there we are. I'm going to stop sharing the screen there. Just take that off. There we go. There we go. And we are going to run. We are going to grab a coffee, and we will see you again soon. We do these regularly. If you wanted to see, let me just show you something else. Apologies. Let's just go back to where we were. There we go. Let's go over there. Okay. It should come up again. And just to show you where to find, that's Anna's site for the coaching programs, and also you can find other details of market analysis all in there. If you're interested in the indicators, you'll find them all over here at quantumtrading.com for all the various platforms. And the stock program and the volume program, the stock program and the Forex program, you will find over here at Quantum Trading Education with that 20% discount applied. So there we go. I'm going to stop sharing. There we go. We will see you again soon. We're going to run. So thanks for coming along today. See you soon, and bye for now.